Hi, my name's Bill Mason from Mason & Mason. I'm a real estate attorney in Garden City, New York, and this is real estate from an attorney's perspective. All right, so what I wanted to talk to you about today was capitalization rate, also known as, or actually more commonly known as the cap rate, okay? So this is a fundamental concept in real estate investing that allows investors to evaluate the potential return of their investment. The cap rate is a metric used to determine the annual rate of return an investor can expect to earn on a property based on their current market value, okay? So now the formula for calculating the cap rate is pretty simple. So the cap rate is basically the current market value divided by the net operating income, okay? So the net operating income is really easy to figure out on a triple net lease because basically all of the expenses are being paid by the tenant as opposed to the landlord. So all of the rent is basically operating income. But when you have a double net or a gross lease, you need to figure out what net operating income is. So net operating income is calculated by subtracting the property's operating expenses from its gross rental income. So the operating expenses, they typically include property taxes, insurance, maintenance costs, management fees, those types of things. All right. So let's say that you have a property that has a $50,000 net operating income and a current market value of $500,000. Basically, based on the formula, the cap rate would then be 10%. Okay, so you would say, okay, this property has a 10 cap or a 10% capitalization rate. Okay, so this is really a useful tool for comparing different investment properties, as it provides like a standard approach to evaluate potential returns between different types of properties. It's very commonly used, and I think you see it on 90% of real estate listings that they write what the cap rate is, all right? A higher cap rate indicates a higher potential return on an investment, and a lower cap rate indicates a lower potential return on an investment, okay? So with that said, I just want to caution people that I wouldn't buy a property solely based on the cap rate. You know, there's other factors you have to look at, like the creditworthiness of the tenant, the term of the lease, is the rent fair market value. You don't want to be buying a property where you're paying above market value. If you have to replace a tenant, you can be in a bad spot. You know, those types of things, the location of the property, of course, that's a key issue with any type of real estate. So these are things that we're dealing with all the time at our firm. We do a lot of commercial real estate. If anyone has any questions about leases or about any type of acquisition or sale of commercial property, I'd be happy to talk to you about it. My number is 516-739-3090, and I would love to speak to you guys. Thanks very much for watching today. And if you like the video, please subscribe, like, share. It really helps us out. Thanks a lot.